Hey, we want to bring in now our favorite recovering European. Veronique Rugy is here, and Veronique, want to talk about, we'll start off in them all. Right? We got Portugal first. They elected a conservative government, and the guy came in, I remember, real austerity stuff. We're going to lower input taxes on businesses so they can actually hire people and invest. We'll raise the obligations of regular people just a little bit for their own Social Security and things like that, and everyone balked. That was about a year ago. It's gotten worse, and now the cabinet's just quitting. It's just a pure mess. It
is a pure mess, but one of the things that we tend to forget is that Portugal was a mess before the crisis hit. I mean, it had negative growth.
But that brings me to the point. All of these places were a mess, right? I mean, they all sort of embraced this sort of socialist, social welfare states. And the idea is that, okay, some of them finally said, we'll elect someone who's a little bit more conservative. Spain did that. Portugal did that. But the citizens have become so used to the handouts that they still aren't willing to do what it takes to get the right to ship.
But the thing we forget about Portugal, it's a poor country. I mean, countries like France, Spain, Italy, you're right, they're a mess. They're a total mess. But they're actually rich countries. I mean, Portugal has agriculture, tourism, vacation homes. Its manufacturing is become obsolete because of China, and that's pretty much it. And it has a pile of debt.
But Veronique, and you report on this too, so Monica and Charles have mentioned this. When you see the Portugal bond yield spiking higher than 10%, you got to say, hey, wait a second. The bond vigilantes are now out and they're going after Portugal. Will there be a spillover effect into other markets? I'm not just talking the Club Med markets, right? I'm not talking Southern Europe. Any other region in Europe? What do you think?
Yes, I mean, there will probably be a spillover. The question is, how are they going to exit? Are they going to exit entirely and formally from the Eurozone, and then you can expect that there will be consequences? Or are they going to do a Cyprus-type exit with, well, they'll exit with some capital control, and they will not trade at par, but pretend they're still in the euro? I mean, it's very hard to predict. But one of the things that's sure is that it's not going to end well for Portugal. It's just not going to. They have no way to repay their debts. And the other thing that you have to think about is they won't be getting any help from the European Central Bank.
But even the richest countries in the world have limits. And I think this is the lesson for Americans watching the show. I mean, you talk about Spain, France, and these other countries. The same mentality is in place. At some point, that mentality, living off somebody else's dime, you run out of other people's money, and you crack. You hit a brick wall. And sooner or later, that's going to happen to all of these countries, no matter how big they are right now.
No, I mean, I totally agree. Listen, I think I've made a living kind of making that exact point and saying that it needs to stop. And obviously, Portugal is going to fall faster because they're not a rich country. It's going to take longer for a richer country, but it's inevitable.
I'm getting the rap signal, but I just want a real quick answer from you. Do you think the people there have to suffer the worst consequences before they have their epiphany, or could it happen before?
I hope it happens before, but it's hard to predict. I mean, they seem to be stubbornly, and not just Portugal, committed to this way of living, which is unsustainable.
It's a great way of living when you can chill out at home and checks just come to you.